The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching. And US President Donald Trump has eyed cuts to Democratic agencies in the government shutdown, saying he'll meet with his budget director to determine which agencies to cut. Meanwhile, the US has sent $230 million to Lebanon as it moves to disarm Hezbollah. And the New Zealand government says it's changing its defence procurement rules and introducing a new military technology fund in an effort to boost its local defence sector as government spending is set to increase. Getting into the charts now with Thomas Atkinson, who joins me from FX Evolution, and looking here at some stocks, but also what we're seeing more broadly with commodities as well. Let's kick it off with gold. This continued rise here, Thomas, what are you seeing?
Yeah, gold cannot be stopped, can it? It's been very good for quite a few years. We've been talking about this for a long time, I feel, but it just keeps going better and better and better. Look, the good thing about gold is it's great technically, and it has been for a while. So what's recently happened is we broke out of a bit of a holding pattern. Sometimes what happens is gold or any asset class becomes really popular, and when it becomes super popular, then basically, the way it works is that everybody piles on board, and then sometimes in the charts what we see is consolidation. Now, gold recently consolidated back in March, April period of this year. It had that really big uptick. It then sat around, and then about a month ago it broke back out to the upside, and we've been very bullish on it since then. The good news, if we do have a chart here for it today, is that basically the move could continue up here, and we've been talking about since those 3,400 levels the idea of a 4,000, 4,200 being on the cards technically from gold, and it's just been continuously doing that. Now, I would caution everyone, the one thing with technicals is there are always two sides to each story. I think the flows, the trend, everything looks incredibly good for gold, but one thing that is a bit scary is that every indicator, particularly if people want to put the RSI on the monthly chart, which is an indicator of relative strength, that is very overboard. And usually what that has done in the past 10 times is we've seen a high level of volatility. Doesn't mean it's the end of the trend, but I wouldn't be surprised if gold gets very volatile as more and more people talk about it. But for now, 4,000, 4,200 is the way we're looking.
All right, so does that mean then, particularly when we're looking at that, and we know that we're heavily resource driven on the market, that we're seeing some movement and buyers coming into the ASX?
That's correct, yeah. So it's coming in across the board. It doesn't matter whether it's rare earth mineral metals, even iron ore. I know there's been a lot of news on the negative side there, but even they've been breaking out. We've got some charts on that later on. And what we're seeing across the board is basically a very strong move in the world towards precious metals and anything to do with possibilities of building out new innovative technology ideas. So you can see here with the Australian 200 market, it was not doing much during the month of September, but then all of a sudden October comes and we start to see a breakout. Getting through that 8,900 level for the ASX 200 has been a very big zone, and to me it kind of signals that we might be heading towards all-time highs, as in closing above them, and it does kind of strengthen the case that the year end may be quite good, which is something we've talked about. So yeah, there's a lot of stats in the favor of the market.
Okay, let's drill into some stocks then and kick it off with one of the big ones. And you touched on iron ore briefly there too, but what are we seeing with the technicals with Rio Tinto?
Yes, that's right. So the big iron ore stocks haven't been doing as well as people have hoped for. They've probably been the worst metal sector, maybe other than nickel. So in general, we've seen a pickup in both of those metals in the futures market. So if you track iron ore, they're actually improved. They recently started to get some negative press about everything that's been going on, but what I found is that sometimes the flows can go against that. I often do say that sometimes, that you need to be watching these charts technically. And the good thing is that we've got this 100 and 21 kind of 50 area here that's broken and closed above for Rio. And this is quite strong. It points to me that the next move technically for Rio is up to the 130, 132 area. And I like kind of what I'm seeing on the charts here. I think it's been sitting for a very long time, and it also tends to have a pretty good November. So November, December can be good for iron ore. So I'm excited to see what comes for this stock.
And what about PLS?
Yeah, another one. They're all looking good. Breakout there on PLS as well. So we've got another mineral metal kind of stock that's been in consolidation for a little while. This one has actually been better this year, just due to what it has. But it's been heavily oversold for a long time. And a lot of people are already calling, oh, these stocks are overpriced and those types of things. I mean, in technical world, we don't really look at the valuation too much. But what I would say is that if you look at the trend of the last 2-3 years, it's been down from a very high level. So the opportunity in some of these stocks is certainly quite good. Really like the consolidation on the right-hand side here. I've written down around that 244 level. We've got what we call a breakout, which is where price has actually gone above the previous highs. And audience will know we like this, because what that signals is that the market may want to move to its next level of equilibrium. And they've put two levels that I think are interesting. About $2.80 is the most heavily traded kind of area. So that's from the left-hand side, like where we saw a lot of market flow before. And $3.16 is clearly what I think a lot of people are going to be looking for, which is that last high point back in November of last year. So very strong stuff here from PLS.
And another stock you're looking at is Iluka. What is that showing you in terms of further momentum?
Yeah, it's very similar to PLS. So it's basically a consolidation for around the same period of time, followed by a really big thrust movement. And the viewers will know the couple of things here that are good. The red arrows pointing towards three really strong green candles that have pushed through and up. $8 is of course the next big resistance kind of level. So again, it's got a fair bit of what we call like free air in front of it that it could get through. And another good sign is that the red and blue lines have crossed each other, and that they're two very well technically respected indicators. That's the 20 and 50 exponential moving average that we've got there on the charts. And when they cross, it can sometimes signal the beginning of a new trend. And in this case, it's been a long time since this stock has done that. So a lot of things have happened in this little consolidation, but I think to break through that 650 kind of area, to do it with such strength, to have this type of thrust this week, and I think it's having a pretty good day today as well in the market.
All right, almost out of time, but I did want to get your thoughts too on what we're seeing with China, particularly the momentum there, given what we're seeing with all our commodities.
Yeah, well, I think this is where a lot of it's driven by as well. So China has been a very good story of central bank liquidity. It's a recovering economy. Obviously, they had some really big tough side on the fundamentals, but from the technical side here, we've got a clear resistance. This is the Shanghai Composite. Now, when you're looking at China, you've got to look at a few different indices. It's not as easy as just America S&P 500. That's it. So when we look at China, we look at the Shanghai Composite and usually Hang Seng, which is the Hong Kong market. The Hang Seng's been breaking out in recent days into the new, I think it's the festival that's going on at the moment over there. And at the same time, we've got this really strong level of resistance around 3,880. And this area here is very strong. It's what we call an ascending triangle. If it breaks through, it signals, again, further momentum. And I would say one thing about China is it's on a multi-year high. So the markets broke out about 2-3 months ago to multi-year highs that they've been struggling with for ages. So this is, of course, a further confirmation of big changes in the air.
All right, Thomas, always appreciate it. Thanks so much, Thomas Atkinson from FX Evolution. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.